All right. Well, we'll get this going here, everyone. Welcome. Good morning. I hope everyone's doing well this morning. Looks like we might be in for a little rain, which I think all the lawns out there need it. And I hope everybody's doing well and surviving what is being quite the little heat wave in the city. I personally love it. I hope everybody's enjoying it as much as I am, because winter is just a little bit behind us and just a little bit in front of us, and we sure hope for these kind of days. So I hope everyone is enjoying some beautiful weather. This is the assignment class, and or video or webinar or whatever you want to call it. And I have to warn everybody in advance. This is a little bit dry, this lesson. You know, we're going to talk about some forms and clauses and how to do an assignment and what an assignment is. And I wish I could lighten it up somehow and make it just the best thing in the world. But it involves going into contract and clauses and conditions. And so it is a little bit dry, so do bear with me. What I do try to do throughout the classes that I do on webinars, I do try to keep up with chats. I really do. But also, you know, if you need to interrupt me for some reason, if I've missed something, if you need to ask a question, please unmute yourself, interrupt me, and I'm more than happy to try to answer the questions. I do a fair number of assignments and help a fair number of agents with assignments, but I'm not an expert at assignments. And I don't believe anybody who is on this, I had a quick look at who's with us here. I don't believe everybody is, and anybody is an expert on assignments. Here's what I know about assignments. I know enough to know about assignments that I don't know enough. Okay, they can be some really complicated deals, especially from a tax perspective. They can be complicated. We're going to brush through some tax stuff that you should be aware of for sure. Some builders' contracts are really, really complicated as well. And you don't have to be an expert at this kind of stuff, but you need to be aware of some of the things that you may run into, okay? Lawyers and accountants are experts in figuring these things out, not you and I, all right? So let's have a look at it here. Just let me check the chats here. And good morning, Maheen. Nice to hear from you, Maheen, and Olivera as well. So assignments. So what is an assignment? The basics. An assignment is when the seller, who is the assignor, assigns the contract that he agreed to with the builder to the buyer, who's the assignee. You're not buying, when you assign, when you do an assignment, you are not buying or selling the unit or house. You are selling the contract, all right? It can be a house or a condominium. You are doing the contract. You're exchanging the contract. You are not exchanging a house or a condominium. You're buying or selling a contract. Does the seller have the right to assign the contract? This is the first question that you need to ask the seller. If a seller is approaching you and says, I want to do an assignment, does the seller have the right to assign the contract? You must have the builder's permission to assign the contract. We actually ran into this just a couple of weeks ago. One of the agents in the Thornhill office said he needed to know how to do the paperwork to do an assignment and to do a listing for an assignment. And my first question to him was, well, do you know if you can? And he said, no, I don't. And I said, well, you better call the builder and find out. And he called the builder, and the builder said, no, you're not allowed to do assignments. And so the seller wanted to assign the contract, and guess what? He wasn't allowed to do it. Some builders' contracts outright refuse assignments. Normally in an assignment, there is an assignment clause or conditions in the builder's contract explaining what the assigner is permitted to do. Most builders' contracts have a paragraph buried somewhere in the 15, 20, 25, 30, 35 pages. That's called assignments. And sometimes you're going to have to wade through the builder's contract to find that paragraph called assignments that says whether they are permitted or not. When I bought my house a couple of years ago, the assignment clause, it was very, very simple. It said one sentence, it said assignments are not permitted. Simple as that. I could not assign that contract. No way, wasn't going to happen. All right. So the number one question that you have to ask the seller is, do they have the right? Will the builder give permission to assign a contract? You have to find that out. When will a builder allow an assignment? Okay. Some builders allow assignments, but the seller cannot advertise that a unit is for sale. Now, why would a builder do that? A builder will allow an assignment, but you're not allowed to advertise it. The reason why that is that the builder will allow you to sell the contract, will allow the seller to sell the contract, but doesn't want to advertise it because they may still have units for sale in that building. They want their own units to sell. All right, they don't want the seller to sell a unit. They want their own units to sell for obvious reasons. All right. Builders allow assignments, but most builders, and it's not some, I should have put most there. Most builders allow assignments, but charge a fee for the right to assign. I have seen the fee for the right to assign as low as $500. All right. I have seen it as high as $5,000, the right to assign. All right. So the builder will consent that they will let the seller assign the contract to a potential buyer, but they want a fee to do that. Some of them are very cheap and some of them are very expensive. And the question is, who is going to pay for that fee? Most buyers, of course, want the seller to pay for that fee, and most sellers want to have the buyer pay for that fee. Unfortunately for the seller, it is really difficult administratively for the builder to accept a check from a buyer to pay that fee because they don't know who that buyer is. They don't have any clue. They have no idea. And so what most people do, what most sellers do, is they build the fee for the right to assign into their list price. Okay, so if they wanted to make a $50,000 profit, all right, on their assignment, but the fee to assign it is $5,000, perhaps the seller is going to charge $55,000. Okay, they build it in as a cost, okay, to the list price and hopefully what they get. If the builder does, the question is, if the builder doesn't allow assignments, can the unit be in the MLS? No. If the builder doesn't allow assignments, you can't do anything. You have to walk away. If the builder doesn't allow assignment, it can't be sold. So it can't be on MLS. Okay. Did somebody else have a question there? Okay. Some builders allow assignments, but only within certain time periods. So some builders will allow assignments, but only within 30 days of a completion date. Okay, they do that because then they sort of kind of guarantee themselves that all the units have been sold. So, you know, a new project starts today in 2020. The build date is not until 2022, and the occupancy date is not until 2023. All right. That you can assign the project, but maybe 60 days prior to the completion date, all right? Because the builder wants a chance to sell all of their units first before they allow any assignments, okay? Same thing, the next one. Some builders allow assignments, but only when a percentage of units have been sold. The same thing, they're protecting themselves that they get an opportunity to sell their units first. And so maybe 80% of the units have to be sold before an assignment can happen, okay? Details about assignment privileges are in the builder's contract. And sometimes, like I mentioned before, a simple phone call to the builder usually gives the answer. The question is, if I am buying an assignment, do I need to know what seller has declared during the purchase, i.e. for investment or for self-use, as it may impact HST component for the buyer? That's from Sanjeev. Sanjeev, the answer is actually no, and we're going to talk about it because it's not what the original seller is going to do with the unit, it is what the buyer is going to do with the unit. And we are going to talk about the HST component in a few slides from now, okay? So this does not matter what the seller has declared, it's what the new buyer has to declare. Disadvantages to assignments, the seller assignor. Any profit realized is taxable. Capital gains is very, very normal for an assignment. Okay, if somebody makes $100,000 on the assignment, if the seller makes $100,000 on the assignment, it is taxed as capital gains. Okay, if the seller only does one of these, maybe once every 3 or 4 years, maybe some lawyers will get away with once a year, but most of the time it's more like 3 years that you can do an assignment. Why? Because if you do assignments over and over and over and over again in a short period of time, the Canada Revenue Agency is going to look at you as being in business, okay? And when you start a business, guess what? Now you're not capital gains anymore. You're now taxable income, okay? Taxable income is a higher rate, percentage rate of taxes than capital gains. Okay, so when you're talking to a seller, do you need to know all of this inside out, backwards and forwards, how capital gains and taxable income works? And the answer is no, you do not. But do you need to talk to your seller about the fact that the income that they make on an assignment is taxable income? Okay, could be a capital gain, could be personal income tax, all right? You do have to make sure your seller is aware that they're not going to get 100,000 at the end of the day. There's going to be tax one way or another. The CRA is going to catch up to them. I've actually heard now, actually this happened about 2 years ago now, that builders are now required to report to the CRA if a unit has been transferred by means of an assignment so that the CRA can catch the seller so that they pay tax. I think over about 4 or 5 years ago, the CRA really didn't have a handle on assignments in terms of getting the taxes from them. I don't think there's too many getting away with it right now. I think most of them are being taxed. And so make sure your seller is being aware of taxes, okay? Profit is realized only after the assigner has closed on the property. Delays in builders' closing dates may mean a delay in gaining profit. Okay, so the closing date is 6 months from today. The seller assigns it. He plans to get that money in 6 months, but in 3 months, 90 days prior to the closing date, the builder, through the carry-on warranty, extends the closing date by another 3 months. That means your seller doesn't get the money for 6 months now instead of 3 months. Just make sure your seller is aware of that, okay? That, you know, you're going to get paid for this eventually, hopefully on the original completion date, but, you know, the builder does have options to extend the completion date. They can extend it from carry-on warranty. I think they can extend it 3 times without having to pay anything. And then if there's an agreement between the buyer and the builder, then they can extend it again, okay? So do be aware that your seller should know that the money may not come right away when you think, because the builder might extend the closing date. And the last one is if there's a profit to be made when assigning now, or will the profit be higher in the future? Should I wait a month and assign? What's the building? What's going on in terms of the value of condo prices? If you watched some videos yesterday in your town hall meetings, not Richmond Hill because my video didn't work, but you saw that condo sales, if I remember correctly, condo sales were up about 7% in the GTA, but condo prices were down, if I remember right, was it 17%? The prices were down. So, oh no, prices, sorry. I have that reversed, but prices were down 7%, but condo sales were up 17%. And so when's a good time to assign? People need to keep track of this kind of stuff. So you do want to make sure that your seller is aware of this. Sanjeev, does seller get paid profit on interim? The question is, does seller get paid profit on interim occupancy or final closing? We're going to talk about this, Sanjeev. Just bear with me. Disadvantages to the buyer. One of the biggest disadvantages to the buyer is that the assignee requires cash to pay for the builder's deposit plus deposit made with the offer, okay? So how does it work? When an assignee is into buying the contract from the assignor, the assignor has paid the builder a deposit, okay? Let's say $50,000, okay? The buyer, the assignee, when he enters into that contract, has to pay the real estate company, in terms of the contract, a deposit, just like any freehold sale, you know, $20,000, $30,000, $40,000 deposit with the contract. But when consent has been given by the builder that the assignment can take place, in general, normal assignments, the assignee has to pay the assignor that amount of deposit that the assignor has given to the builder, okay? The assignor is actually not out that money because the builder is holding on to the deposit. The builder's never going to give out that deposit back to anybody. But the assignor gets his money back. And so if it's $50,000 that's deposited with the builder and the contract for the agreement of purchase and sale for an assignment, the deposit is $30,000, all of a sudden your buyer needs $80,000 within a relatively short period of time. And in general, that needs to be cash, okay? If they put it on a line of credit, then that amount of money is going to count against their gross debt service and maybe will screw up their mortgage. And so once again, you have to have a financing clause to make sure that everything can go through properly. And we'll talk about those clauses in a few minutes. So just make sure when you're talking to a buyer and they're thinking, oh, I think I'll buy this condo, you better find out how much cash this buyer has on hand, because in a relatively short period of time, they're going to have to pay the deposit that goes with the contract, but they're also going to have to pay the assignor whatever that amount of money is with the deposit with the builder. So basically 2 deposits has to be paid, okay? The assignee, any questions about that?
Yes, hi, John. Yeah, you kind of lost me there regarding the assignee paying the assignor. The deposit that the assignor put with the builder, let's assume with what you said with your example, $50,000. How did that grow to $80,000?
Okay, great, no problem. So the builder's deposit is one deposit that has to be paid, correct? Right? And the second deposit that has to be paid is the deposit that is put down on the agreement of purchase and sale to pay to the listing brokerage.
Oh, okay. Now I got it.
Okay, no problem, Jeff. Good question. Thank you.
Okay, thank you.
No problem. The assignee has to abide by the builder's contract in terms of completion dates. And we'll see when we go through Form 145 that there is no completion date on the agreement of purchase and sale because we have to abide by the builder's contract. So we've had a few deals here that have definitely fallen apart when the buyer understands that there is the completion date is the builder's completion date, not the date that they necessarily want, because you can't put a completion date down on an assignment. And the problem with that is that the buyer has sold their house, as an example, and they have a closing date 3 months from today, as an example. They've sold their house. They want to buy the condo, all right? And the condo, the builder's closing date is 3 months from today. Perfect. It all matches, except tomorrow, under the Terry on warranty, the builder extends the closing date by 3 more months. That's a real problem for a buyer. So your buyer has to have some flexibility to be sure that the closing date is, if it moves, can the buyer be flexible enough to move with that closing date? Okay, so you have to be careful with that when you're talking to a buyer, that they understand that the closing date is not 100% guaranteed. That's in the builder's contract. Another problem for a buyer: some lenders only lend on the amount of the builder's contract, not on the assigned value. The assigned value is the builder's contract plus assigner's profit. Okay, so the builder's contract is $450,000. The assignment agreed upon is $550,000 because the assignor is making $100,000 in profit. Okay, $550,000. The buyer happily goes trotting off down to the mortgage broker, and the mortgage broker says, no, can't do that, because the lender will only lend on the builder's contract. Now, I have seen both. So if you have a good buyer, a good assignee, and they go to a mortgage broker, and the mortgage broker says, no, we can only lend on the builder's contract, don't think that that's the way it is with everybody. All right, there's lenders out there that will lend on both. All right, now sometimes the lender, of course, will charge an extra 0.25, 25 basis points to have that privilege of lending for the assigner's profit, basically. But don't be discouraged if the first mortgage broker says no. Don't forget that, just as a quick aside, mortgage brokers generally work with just a limited number of financial institutions. They don't work with every single lender that's out there, all right? So if you get a no answer the first time around, try another one, all right? Another disadvantage for the buyer, and certainly this has changed during COVID, the assignee may be approved today for a mortgage, but the situation may change in the future. Yes, 6 months ago, a buyer was approved for a mortgage for an assignment, but now the other income earner in the family has lost their job. Uh-oh, that's no good. Now you're going to be in trouble. That's actually happening for not just assignments today. That's happening for a lot of sales, where people really have to scramble for mortgages because one person has lost their job in the family. So it causes problems, not just for assignments, but for all sorts of different situations out there today. Just let me check. There was a chat there. Just let me check to see. Just one moment. The question is, would the mortgage depend on current market price and appraisal? That is why the answer to that is a little bit both, actually, Kirti. That is why some lenders will only lend on the builder's contract, is because the lender feels that that is market value, all right? The profit that they make, that the assigner makes, is not necessarily market value today. It's more so market value when the property closes, when it has completed. And so that's why some mortgage lenders will only lend on the builder's contract, okay? Usually only one assignment permitted. So the assignor sells his place to the assignee. Now the assignee says, I want to sell it again. Normally, that contract can only be sold once, all right? It's not often that it's done twice. I've often wondered why not, but I think it's got something to do with the CRA, that the CRA can't track profit that is being made twice on the same unit. I'm guessing there, folks, but I believe that is the reason why. If anybody has another reason why that could be, I'm all ears. But do be careful that your buyer reads the contract very, very closely, the builder's contract very, very closely, to determine if it can be done again, okay? Just let me check my chat button again, folks. Beta asks, when does the buyer need to pay the seller's profit? Great question, Beta. The buyer generally, most assignments, the buyer pays the seller's profit on the completion date. Now, I have seen a few exceptions that the buyer pays the profit when builder's consent has been given, but it is a little rare, okay, Beta? Most of them have the assigner's profit is paid on completion. In other words, when they get the keys to the unit, when the buyer gets the keys to the unit. But I have seen it opposite, that the profit has been paid when builder's consent has been given. So it can be either or, but most of the time it's when it has been completed. Completion means closing, not occupancy. Sorry, I'm just going through the chats here. No problem, Beta. Assignments and renting. The builder's contract may have very specific conditions concerning whether or not the final purchaser, back to you, Sanjeev, will be renting the unit out as an investor or for personal use. When the buyer is purchasing an assignment, the lawyer and the builder want to know what is going to happen with this unit. Is it going to be for personal use or is it going to be rented out? All right, that is the question. All right, if the purchaser is an investor, the builder may not qualify for the homeowner's portion. I should have had homeowners in there, sorry. If the purchaser is an investor, the builder may not qualify for the homeowner's portion of the HST rebate. All right. As a result, the cost of purchasing may go up on closing. It depends on what happens with the builder's contract. However, subject to all sorts of certain limitations, the purchaser, now the landlord, may qualify for an HST rebate after closing. What that means is that if the purchaser is the landlord, is a landlord investor, and declares that they are going to be an investor, then the builder's contract, they're probably not able to collect from the CRA the homeowner's portion of the HST, all right? And as a result, your purchaser, who's now an investor, has to pay the builder's portion of that HST amount. Now, the bad news is that the investor is going to be out that money. The good news, subject to limitations, means that the investor can claim back that HST after closing. So he has a cash flow problem, okay? You can see in red, I hope you can all see this, you must have a lawyer's approval of the terms in all offers when it comes to an assignment. All right, this is what covers you. Do you need to be an expert in HST when it comes to an assignment? And the answer is no. You definitely do not want to hold yourself out as being an expert. The only expert that you're allowed to hold yourself out as is a real estate salesperson, unless you actually have a formal designation stating otherwise. I know there's some agents that we have at Century 21 Heritage Groups that are accountants. They can hold themselves out as an expert because they're an accountant. You can't. Do you need to know a little bit about HST and how it works? Yes. Here's what I would say. Hey, Mr. Purchaser, you're going to rent this place out. you know, there are some HST rules that you should be aware of. I believe that what might happen is that you may have to pay the builder's portion of some HST, but that you can claim it back. However, you really need to speak to a lawyer or an accountant about this to be certain. All right? Don't try to tell them exactly how this works. All right? I don't know exactly how this works, and I'm the one teaching the course, and I don't know exactly how this works. I'm not a lawyer, I'm not an accountant, and neither are you guys. Should you be aware of this? Yes. Should you advise your clients to talk to a lawyer? Yes. Should you have the lawyer's clause in the agreement? Definitely, 100%. Okay? I know enough to know that I don't know enough. Paperwork. The paperwork. They have their own agreements of purchase and sale. Condominiums, Form 150, freehold home. Do I have that backwards? I'm gonna find out in a minute. I have a feeling I have that backwards. All other paperwork is the same. You need FinTrack for your buyers or sellers. You need confirmation of cooperations. You need a buyer representation agreement, or you need a listing agreement, or you need a working with a realtor. The paperwork is the same. All right. Please remember, you must hand in your paperwork once the confirmation of acceptance is signed, even if there are conditions in the offer, including the agent sales information sheet. Please don't forget, okay? Form 150. Give me one moment here, please. And we're going to have a look at Form 150. Here is Form 150. All right, this is the assignment agreement of purchase and sale. I don't want to do that. So, pretty normal. This should look pretty normal to people. Dated, assignee, assignor, assigner's interest in the property. It's pretty much a lot like a condominium. You know, you've got the regular stuff, unit number, level number, condominium. The other form is Form 145, which is for a sale of a house. Looks pretty similar as well. Are there parking spaces? Are there lockers? The purchase price. The purchase price is the total purchase price, including the profit that the assignor is going to make. Back to Jeff's question, the assignee submits a deposit here, Jeff, you know, 20,000, 30,000, well, you know, whatever's kind of normal. And here with upon acceptance or otherwise described, that's all normal as well. Okay. And it's same thing, the deposit is 24 hours upon acceptance, same idea, okay. It says here that the assignee and assignor acknowledge that the purchase price noted above includes both the purchase price the assigner is paying for the properties indicated in the agreement of purchase and sale between the assignor and the seller of the property attached hereto as Schedule C. You will see as we go through this that it mentions over and over and over again that the builder's contract is Schedule C, okay? If you are the seller agent, you need a copy of the builder's contract, all right? If you are the buyer agent, the listing agent has to supply you with a copy of the builder's contract. It is attached as Schedule C to Forms 145 and 150, the assignment forms, all right? It also includes the amount being paid to the assignee to the assignor's payment for the assignment agreement. That's the profit that the assignor makes, okay? It says here that the assignee and assigner agree that the funds for this transaction will be calculated and paid as set out in Schedule B, attached hereto and forming part of this agreement. We're going to go through this. Irrevocable is the same. The assignment once again, it's going to be as per Schedule C. The assignee covenants that they can sell the place, that they can assign it. The assignor covenants that they have the right to do it. Notices is exactly the same in the agreement of purchase and sale for anything that if you're in multiple representation, you cannot give notices to your buyers and sellers. It has to go to a third party. HST, you should pretty much, I think, in all cases, have HST as included in the purchase price. Why? Because most, and I think today, I'm going to go out on a limb here and say every builder's contract has HST in it already. So there's no difference here, it's included in. I've never seen a builder's contract in the last 4 years that HST is in addition to. Okay, it's included in the price. If you're paying $495,000 for a builder for a house, HST is in already. Future use, this is all the same stuff. Residency is all the same stuff as a normal agreement of purchase and sale. And another note, Schedule C, once again, approval of the agreement. You got to have the builder's contract in there. It says it over and over and over again. All the rest of this stuff is basically the same kind of thing. So pretty standard, not too difficult to do. All in all, you have Schedule A in here, and it says here the balance of payment under this assignment agreement. The assignee will deliver the balance of this payment for the assignment agreement as more particularly set out as in item 6 on Schedule B, subject to adjustments, with funds drawn on a lawyer's trust account in the form of a bank draft. Very, very similar to what's in a normal agreement of purchase and sale. And then you get to Schedule B. Schedule B is where most agents have a really, really difficult time in completing Schedule B, okay? So move this out of the way for a second here. So we can see Schedule B. So Schedule B has 6 lines on it, all right? The total purchase price, including the original agreement of purchase and sale and this assignment agreement. So this is basically what is coming from page 1, the total cost that the assignee is purchasing from the assignor. It includes the profit. The purchase price of the original purchase of the builder's contract in Schedule C, right? So you have that there. The deposit paid to the assignor to the seller under the original agreement of purchase and sale is indicated in Schedule C. This is the builder's deposit that goes here, okay? Then this little line here, this is where it gets confusing. This dotted line is not a break in the page. This dotted line is these choices, all right? These choices here, because number 3 says, deposit paid by assigner to the seller under the original agreement of purchase and sale as indicated in Schedule C, to be paid by the assigner to the assignor as follows. And you have to put something on this line. And here's your choices. Upon acceptance of this assignment agreement and receipt of consent to assign from the original seller. Okay, that's choice number 1. That's the one that is used the most often. That means when we have consent from the builder, the assignee has to pay the builder's deposit to the assignor. Okay, that's what the assignors want. What the sellers want is they want their money that they paid to the builder. All right, your buyer is not actually, you know, he has a cash flow problem now because the builder still has that deposit of $50,000, okay? The buyer has to pay that deposit back to the seller, all right? So it's kind of a wash in many ways, okay? The second choice is upon final closing of the original agreement of purchase and sale and this assignment agreement. So when the builder finally closes the deal, that's when the assignor gets his money. So that could be in 2 years from now. That could be in 3 months from now. That could be in 8 months from now. Who knows when the builder's closing, right? That's why most assignors want the first choice, okay? The last choice is as otherwise described here or elsewhere in this agreement, okay? In which case you can put down in Schedule A something else. And so I have seen in Schedule A that the assignor will receive the builder's deposit 30 days following the builder's consent being given, okay? I've seen 50% of the builder's deposit being paid to the assignor upon builder's consent, and the second 50% within 120 days. So you can put pretty much anything you want down here, but you have to put something above this dotted line because number 3 says, as follows. You have to choose one of these 3 things, okay? Any questions about that? It's the part that most agents miss. They think the dotted line is just a break in the page, okay? They don't read this properly, that it's as follows. So you do have to be careful that you pick one of these 3, okay? Number 4, payment by assignee to assigner for this assignment agreement. This is the profit, $100,000. Deposit paid under this assignment agreement from page 1, $30,000, let's say. Balance of payment for this assignment agreement. It's the difference between $100,000 and $30,000 in this example is $70,000, okay? This is what the CRA sees to calculate the tax that the buyer has to pay, all right? Just going to switch screens here. Oh, sorry. I should ask before. I'm going to switch screens, but just before that happens, questions. There's one in the text box, chat box. Just one moment. Who completes the Schedule B? The buyer agent completes Schedule B. You're the one who's giving the offer. So the question is, who completes the Schedule B? You're the one who's completing the offer. You're representing the buyer. You complete Schedule B. Now, I can tell you, I review a lot of assignments to make sure that it's correct, okay? So if you're doing an assignment, Leah, don't hesitate to send it to me so that I can check it over for you. No problem at all. Just going to switch screens here for a moment, bear with me. So, Schedule B. I'm going to just play a quick video here. Just bear with me for a moment while I get to the right minutes here. What this is this is a video put out by Aurea, and it is called the Assignment Agreement of Purchase and Sale. What's the big deal? Okay, everybody thinks it's this big mystery. This is a, let's just see here, about a 52-minute video. And we're going to listen to just about 4 minutes of it. Okay, so just bear with me while we get this going here.
Because we wouldn't be able to be successful in our webinar with our members.
Hang on, now that I've started it. Did everybody hear, did just 1 or 2 people, can you just tell me, did you hear that person talking?
Yes.
Yes.
Wonderful, thank you.
Thank you.
We're going to start here.
To our next agenda topic, we have the Schedule B. We look at the Schedule B. In clarifying much of the mathematics or understanding the initial, the final price, how the original deposit is reflected, what is the assignment balance, the parties, again, looking for clarity between the parties, making sure nobody's confused. I would start with the realtor, making sure the realtor's not confused because the realtor's the one with advice and comments to those parties involved. So in taking a look at this, let's have a sample of the Schedule B. I'll go to the next slide. We're going to complete it by the mathematics. You'll notice I've pulled out the mathematics part. If anybody has seen the Schedule B of an assignment agreement of purchase and sale, I'm just using Form 145. Identifying in number 1, it requires, and really, sorry, before I go forward, I know Lou has even been heard to say, if you complete Schedule B, and we put this into marketing, It pretty much is a vast majority of the understanding of the assignment agreement of purchase and sale. So let's take a look at this math. Total purchase price, including the original agreement of purchase and sale. If we hypothetically had a $620,000 total purchase price, including the original agreement and this assignment, the purchase price of the original agreement was $520,000. The deposit paid by the assignor to the seller under the original agreement of purchase and sale, as indicated in Schedule C, which is, remember, the copy of the agreement, to be paid by the assignee to the assignor. And then you'll notice in the midsection, there's a choice to identify how that would be paid by the assignee to the assignor. And that's where the dotted line is. Moving forward, the payment by the assignee to the assignor, the difference between the two agreements, the original agreement and the assignment agreement, is $100,000 from the original $520 to the $620. The deposit paid under this assignment agreement in accordance with page 1, $10,000, leaving a balance of the payment for this assignment agreement of $90,000. So I think in clarity, I think there's a body in the middle identifying how that original deposit will be dealt with. Short of that to be clarified, the math kind of works out nice and straightforward. Now, if you have, I've tried to use fairly straightforward numbers there. If we have questions, we will pick up on it again. Maybe I can ask if there's anything to add, Lou?
No, you know, the numbers speak for themselves. I mean, and you've identified them. The timing is something different. And what I mean by that, on that dotted line, there are certainly different choices that somebody can have, including, for example, moving to Schedule A and defining a different timing than what's available on this dotted line. And you would say something like, as otherwise described, and then move to Schedule A and define it. And those circumstances could come up. For example, if I'm talking about a new purchase, the deposits made by the buyer.
Okay, so I'm just going to stop it there. Just let me go back to my other screen for a moment. Just bear with me. So, oh, sorry, wrong one. I'm sorry, I made a mistake there, folks. Bear with me again. There we go. So I see a couple of chats, but just give me 1 second here. We're back to Schedule B. You could see at the very end there that what the gentleman was saying, that it should be as otherwise described in this agreement of purchase and sale. That video was put out about 3 years ago, and they're using an old assignment paperwork. And you can see in the new assignment paperwork, they have as otherwise described elsewhere in this agreement. And so I wanted to show you that video so that you saw the math on how this happens, okay? The original purchase price, the purchase price in this offer, the purchase price from the builder's contract, the builder's deposit. How is the seller going to get that builder's deposit back? All right, the profit for this assignment agreement goes here, the first deposit from page 1, and then the balance for this assignment agreement. Let me go to the chats here. The question is from Kirti. It says, she asks, which agreement is signed first? The AREA agreement of purchase and sale for assignment, or the builder's standard agreement for assignment? Right, so the agreement of purchase and sale is completed first, because what's going to happen first, Kirti, is that you're going to have a lawyer's approval for the terms. You're going to have maybe a financing clause in there as well. And then the builder's agreement for assignment would be signed and the builder's consent would be given second. That is Schedule B. Are there any other questions for Schedule B?
John, the
Sure.
question I have, I just want a little bit of clarity on this. The deposit that the assignor pays to the builder, the assignee pays that back to the assignor, but that's not part of the profit that the assignor made from the sale.
Oh, that's correct.
Okay.
Conditions and clauses. Oh, the really dry part of this presentation coming up now. Assignment clauses. So, assignment clauses. These assignment clauses can be found in your Google Drive and in the web forms. When you're in web forms creating an assignment, these assignment clauses are already preloaded into Schedule A for you. And all you have to do is choose the ones that you want to use. All right, these are the most common ones though, and they're used a lot. You'll note, first thing it says, on Schedule B, under number 3, the assignee must choose when the deposit will be paid back to the assignor, the builder's deposit, when it's being paid back. I think I've covered this enough now, okay? But you can't believe the number of assignments that I see when that is blank. So don't forget to do that, okay? So the assignment clauses. The contract is an agreement to purchase the assigner's contract. The assignee will take over the contract in its entirety, including all rights, regulations, and obligations, okay? The buyer is agreeing to assume the contract. This offer is conditional upon the assignee reviewing the following documents and finding such documents satisfactory in the assignee's sole and absolute discretion. A full copy of the agreement of purchase and sale, including all amendments and correspondence between the builder and the assigner. A list of all features and finishes for the unit, and a copy of an upgrade form if applicable. The original disclosure documents provided to the assigner by the builder. The assignor agrees to deliver the documents within 3 business days of acceptance of this assignment, and then the buyer has 3 business days following receipt. Sort of almost like a condominium status certificate, except it's the builder's contract. The approval of the assignee's solicitor. Okay, the buyer's solicitor gets to approve it, all right? The assignor's solicitor. So I often get the question, as representing the buyer, why should I put in a seller's solicitor's clause when I'm representing the buyer, all right? And the reason for this is that when you put in an offer for an assignment without a seller's lawyer's review, and I know you're representing the buyer here, all you're doing is begging for a counteroffer because the listing agent has to put in the seller's clause, the seller's solicitor's condition, all right? So instead of begging for a counteroffer from the listing agent, why don't you make it simple and put in the lawyers for the seller's clause as well, so that you're not begging for a counteroffer. What I mean by begging for a counteroffer is, let's say the list price is $500,000. You put in an offer for $485,000, okay? The listing agent has to put in the seller's lawyer's clause as a counteroffer. Well, while they're at it, while they're putting in that condition, why don't we up the price as well? Why don't we counter it at $490 instead of $485? All right. Whereas if the seller's lawyer's clause is in the offer already, then maybe they'll accept $485 because they don't have to counter the offer with the seller's clause. Do you guys get that? Do you understand that? It's just a nice, easy trick to try to avoid a counteroffer. Okay? Any questions about that one? You guys got it? I'm assuming yes. Mortgage clause, financing if necessary, of course. Here is the consent of the builder. Once the above conditions are fulfilled, the assigner shall immediately request the consent of the builder of this assignment. You have 14 days to get that. And if the builder's consent comes in on the, let's say, the 8th day, guess what has to happen? Your buyer has to pay the assignor the builder's deposit. In other words, he's going to give that money to his lawyer. The lawyer is going to give it to the assignor's lawyer. Okay? So be aware of this. All right? Just let me check the chats again for questions. Gisela, can you please email us the list of clauses for basic restaurants? It's in your Google Drive, Gisela. It's all there. And it's also in web forms under the assignments package. But if you can't find it, if anybody can't find those clauses, I'm more than happy to email them to you. Just let me know. The assignor and the assignee shall forthwith forward any notice from the builder to the other party, of course. The buyer assignee agrees to pay the balance of the purchase price herein the following manner. All right. The buyer shall pay the deposit attached to the assignment agreement to the listing brokerage upon acceptance of this assignment agreement. That's the deposit. The builder's deposit will be paid, and the buyer will pay to the builder on the unit transfer date. So back to Sanjeev's question, when is the unit transfer date? Sanjeev's question was that upon occupancy or upon completion? And Sanjeev, it is up to the builder and the lawyer to figure that out, okay? It's not a hard and fast answer. What Sanjeev asked is that, what that means is that some places, some condos, will allow the buyer to occupy the unit, but the condo hasn't closed yet. Okay, because they're waiting for, what are they waiting for? They're waiting for the condominium, the declaration of the condominium corporation, and they have to have a condominium corporation. And normally, Sanjeev, to answer your question, the completion date is when the condominium corporation has been formed. But that is, once again, beyond the scope of what we're talking about here. Let the lawyers figure that out. Let your buyer ask the lawyer, okay, when he has to pay for it, and the lawyer will explain it to them, okay? This is the clause, number 9, that the assignee agrees and understands that the completion date is set by the builder and that the said closing date may be subject to change based on the terms and condition of the builder's agreement of purchase and sale. It's not a guaranteed closing date. Forms 145 and 150 do not have completion dates on them, and it's as per the builder's contract. This is also something we've talked about already, about HST rebates, and it's always a good idea to put that in there. We've talked about it already. Any taxes incurred for the assigner shall be the sole responsibility of the assigner. The assigner needs to know that capital gains, or in a worst case scenario, income tax, may be levied against the seller, okay? And back to Sanjeev's question about when the unit has sold. So Sanjeev, if there's early occupancy allowed, but the unit has not closed, then you need to include this paragraph as well, that the buyer agrees that they can occupy the property from such and such a date until the date of completion at a monthly fee herein referred to as an occupancy. This is all in the builder's contract, by the way. The occupancy fee and all this stuff is due and payable, and the buyer can occupy the property, but it has to pay a fee to the builder to occupy that property and until the completion date, okay? And those are all clauses that are available to you to use at any time. And I certainly recommend that you include most of those clauses in there. So I'll give you guys a chance to write this down. If you want to watch the ARIA video, and it's a great video, you guys, it really is. I showed you just a little tiny portion of Schedule B so I could show you the math. It's about a 55-minute video, and it's a great video on assignments. And I highly recommend that you guys watch this video from start to end. Okay, it'll teach you all the ins and outs. There's a great answer. Actually, you heard Lou. Lou is a lawyer. I can't remember which lawyer firm he talks to, but the ARIA lady's talking. Lou is a lawyer that's talking. Actually, I think there's 2 lawyers in that video, showing you all the paperwork, lots of what I've gone through. Certainly, they talk a lot about Schedule B, more than what I showed you. It has all sorts of parts about the conditions and the clauses. It gets a little bit more into occupancy prior to completion, Sanjeev, just to answer that again. And I highly recommend you guys watch this video. It's just a tremendous video on how to do assignments. So I'll give you 2 minutes just to write that down. In closing, last one, assignments can be another aspect of your real estate career. If you can understand Schedule A with all the clauses and conditions and B, and if you can wade through the builder's contract, you will be far ahead of the competition. The reason why I put down, can you get through the builder's contract? What I'm trying to really point you towards is the assignment clause. As a listing agent, what can you do? Are you allowed to assign this contract? Under what, and if yes, under what conditions can you assign this contract? If you are the buyer agent, if you're the assignee's agent, can you at least get through the deposit amounts that have been paid? Can you discuss any upgrades that have been given to the original buyer? And does the assignee like those upgrades? I mean, you know, maybe they've got, you know, green tile floor in the shower, you know, I don't know, and you hate it. You know, you better make sure that your buyer understands what upgrades have been given. The AREA video is just a great resource for learning about assignments. Once again, be aware of capital gains or income tax, and always, 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 always include a seller's and buyer's lawyer's review in every offer. That is the end of my assignment webinar, ladies and gentlemen.